a bit of music for now. Okay, let's talk about the update for the American and European market. My last update was made 3 weeks ago when I was predicting a couple of months of recovery for the stock market for both American and European market, most importantly for the American market. My idea was to see the Nasdaq Composite Index going to hit 7,000 points, and actually it happened. Now I have in front of me the Nasdaq 100 Index, so the composite index for the most 100 capitalized company. And it's a really interesting chart. So here I plotted the Gooping exponential moving average. And we've seen 4 weeks of uptrend that started actually at the end of January, at the end of December. So it's interesting to say that December 2018 has been the worst month since the last 40 years, while January 2019 has been the greatest month since 1987. All right. So when we talk about 1987, we know what happened in that period, over that period. So let's not be too optimistic about 2019. So someone is saying is predicting we'll have a tough recession. Someone else will just saying that it will be just a slowdown of the growth. This is very difficult to say. So I don't want to predict. I'm not able actually to predict if we will have a recession or we will have just a slowdown of the growth of the world growth. This is something, because since I don't have the crystal ball, what I can predict are the short-term movements, as I did with with December 2018 and January 2019. So what I expect for February, now it will be really interesting. Before sending out any forecast about February, I will wait to see what will happen with the Goopy moving average. In other words, if we calculate the derivatives, the first derivatives of the moving average, both short and long, we will have an idea about the possible outcome for the market over February and March, or let's say for the first semester of 2019. So far, why we have to calculate the derivatives, the first derivatives of the moving average? Because this will give us dependence, the rope of the moving average. So if this is positive, okay, we have, let's say, statistically speaking, we have more probabilities to see sorry, I said the rope, the slope of the moving average. We will have a bigger probability to see the market going up, okay. This is more valid for the long-term moving average rather than for the short-term moving average. Okay, what is happening now? What is happening now is that we see the short-term moving average, which are getting closer to the long-term moving average. But now it's really interesting because if we analyze the volumes, okay, for the futures of the Nasdaq, we will see that this movement has not come along with bigger volumes than at the end of 2018, which is something worrisome. Okay, we've seen the first candle in 2019. It was an hanging man reversal, or a sort of reversal pinball with increased volumes, which gave us an idea about the possible continuation of the uptrend. However, the last week, which is the last weekly candle, which is closing today because today is Friday, is a small hanging man, which means not such a big volatility, and the close below the high of the candle. It's I would say small hanging man rather than a doji candle. But most importantly, we see that the fast moving average are still below the long moving average, and the calculation of the slope of the long moving average is negative, okay, while it's positive for the short term. However, before predicting market going up even for the next couple of months, we will need to see both of them. So the slope for the fast moving average and for the long moving average positive. So how we know it, calculating the derivatives, the first derivatives of the moving average. In this case, we just see that some cross between the fast moving average, but the slow moving average are still above the fast moving average, which is a negative signal, of course, a negative factor. Furthermore, if we believe in the moving average, by the way, if we believe in the middle moving average in the Bollinger Bands, we see that now we are approaching the 20 period moving average, okay, for the Bollinger Bands. So it will be really interesting. I don't think we will go above the 20 periods moving average. I'm talking about the weekly chart for the Nasdaq index, which will give us the trend for the near trend for the next month. Now it's really interesting. To me, what happened in the market is just, it was just a rebound from a very oversold situation. I said that last month in December 2018 has been the worst month over the last 40 years, while January has been the greatest month since 1987. However, we should remind what happened in 1987. We had a huge crisis. So before opening long positions and keeping on that for a longer period, I would be very careful. So far, I'm still shorting the market. So 3 weeks ago, I was suggesting to short Snapchat and Altria Group. Actually, what happened is that I was right, but I made a mistake because I was short with Altria Group and I was gaining, if I'm not wrong, only 4 or 5%, and then I closed in profit my position, but I closed it, and then the day later the stock went down, if I'm not wrong, for another 7%. Now today, or yesterday, was losing another 3%. Today I didn't check. Okay, today it will open in 5 hours. So let's see. Snapchat as well at a minus 10% or 12% last week. Last week or this week, at the beginning of this week. I was wrong with the Wirecard. Let's say that with Wirecard for the German stock, I was shorting. I took a loss. The reason is that I'm still short with Wirecard, and I will enter short again as soon as I will see valid patterns, technical patterns. What happened is that, if we have a look to the monthly chart for also the weekly chart for the Wirecard, we will see that we see a vertical exponential movement with 2 monthly huge black candle, which give us an idea about the future possible movement downtrend. However, that was just a rebound till the 20 periods moving average. Now let's see. Obviously, everything can change, situation can change, so we have to monitor constantly the situation. However, don't believe in Wirecard to be a long run up for the next month. So I would re-enter short once I will see a break below the monthly low, okay, which will be the monthly low in December, actually, because in January we have seen a very good run up for Wirecard. Then what else? Atos, Valeo are 2 interesting stocks again to be short. Now it is really interesting. Yesterday there was the ECB meeting. Okay, so Mario Draghi, the president of the ECB, was having a speech. And what happened during that moment?